report on 2014's Best Small Business Cities in America. Today, we have Rohit Arora, who's the CEO of Biz2 Credit. My name is Anita Campbell. I'm the founder and CEO of Small Business Trends, and also a small business owner of a woman-owned business. We were to be joined today by Lisa Cook. We have had a last-minute change, unfortunately, due to a last-minute change in her schedule, so she will not be joining us. However, the good news is Rohit Arora is our expert in the research that was done, and I know that he'll be able to present a lot of great information today.
Yeah, thanks, Anita, for the introduction. And so I will be presenting this study, and then Anita will also be sharing her experience. And as Anita said, Lisa unfortunately cannot join us today, so that will give us a lot more time for Q&A. So like if you have more questions, you can ask, and we have a Twitter account also. You can post it on that, or you can ask it on the webinar itself. As Anita said, so Biz2 Credit is a 6-year-old company. We are a credit marketplace. We help businesses get access to credit, both from banks, micro lenders, as well as alternative lenders. And one of the key issues that we have been looking at over the last 2 years now is that, which businesses are growing faster than others, but also which metropolitan areas are better for business growth than others, because that's a very important aspect. During the Great Recession that we had, we have already seen that, parts of the country like Florida and California, traditionally big small business hubs, have suffered a lot because of the real estate meltdown, and that led to the great credit crunch, which impacted the small businesses in those areas a lot more than big businesses. There's a lot of data around that, how the loan growth or the shrinkage of availability of credit for loans less than 1 million has been there. So, the latest data coming in from FDIC and Federal Reserve shows that there has been a 20% plus drop in loans under 1 million over the last 5 years, while loans above 1 million have actually grown by at least 5 to 7%. So that clearly shows that there has been nationwide challenges for credit, but the challenge for credit in areas which had bigger impact of the Great Recession was even worse. And that actually, inspired us to look at, top 25 metropolitan areas over the last 2 years, because as the economy is coming back, a lot of people or a lot of areas which actually had suffered the most, the good news is that they are coming back. So a lot of small businesses who are looking to open a business or want to grow a business, some of those areas which were really more known for bad news are actually some of the best places right now to go open or expand a small business. And that's what we want to highlight and educate our small business clients and customers and subscribers. And we also are looking by minority growth, growth by women-owned businesses, and also by industries. And the key aim is to keep tracking it and keep getting more input from you guys, as well as keep helping the business owners to decide what kind of businesses they should get into and what areas of the country they should really be in, as they grow their business. So obviously, this slide, I am quickly jumping to this slide where, I don't need to rehash that how important small businesses are for US. Over 64% of new jobs have been created in this country by small businesses. There was a recent study by Kaufman Foundation, which said that, even all new jobs, all net new jobs in last 6 years have been created by small businesses. So that's an amazing stat, While over a 15-year period, it's 64%. Over a 5-year period, all net new jobs have been created by small businesses. And and the government realizes that, the policymakers realize that. Unfortunately, still the action on the ground has been a lot less than the words, and that's where I think this whole study that we have done by metropolitan areas will be able to highlight to you guys that there is still a lot of opportunity in US. There's still a lot of stuff that could be done. You need to be smart about where you go and what you do. So So just to give you an idea how we did that study, so we analyzed over 12,000 small businesses across the country, because we collect a lot of data on those businesses, including where they are located, what kind of revenue they have, what kind of age of business, their cash flow analysis, because we collect all their financial information, we look at their industries, and then we have our own Biz Analyzer score, which actually, scorecards every single customer on our platform, and we update that score every quarter or every year, depending on the frequency of data that we get access to. And then we also, have looked at, the businesses where we said that, they have to be less than 250 employees, less than 10 million in revenue. And, and we've also looked at the credit scores of the business owners, because whatever we say, almost all small business lending as well as contracts in this country are still driven by a personal guarantee from small businesses. That clearly means that the credit score plays a big role, whether you are looking to borrow money or you are looking to apply for new contracts out there. And that's something very important, because there has been a lot of debate whether what role FICO scores will play. And in the absence of any single small business lending scorecard out there, FICO still is a pretty dominant criteria for both for credit, access to credit, as well as for shortlisting the small businesses if they're applying for contracts, including federal and state contracts. So that's why we took that into account. And this is something very interesting. So we analyzed over 100 cities, and some of the results were very surprising. So obviously, San Jose, Sunnyvale, a lot of people think that it's a space where, or a place in the state of California where most of the high-tech startups are there, and they get VC money. So what we did in this was that we didn't take any high-tech startups, because we don't do any equity financing. We do only debt financing. So the clients who come to us, or business owners who come to us, are main street small business owners, gas stations, liquor stores, bodegas, dailies, healthcare, professional services, transportation and logistics. And one thing that we found very interesting was that the San Jose Sunnyvale area is one where three things are happening. One, there has been a big technology boom that has brought in a lot of money to to companies, big companies like Google's and eBay's of the world, but also a lot of startups which have started and have grown pretty quickly. But that has also helped a lot of Main Street small businesses, whether they are in the business of food and services, accommodation, they're in transportation and logistics, they're in professional services. So the whole the uplift in Northern California economy because of the tech boom has not just benefited tech-centric startups or small businesses, but also non-tech-centric small businesses. So that's very important, because we hear a lot about disparity in Silicon Valley right now. But one thing that we need to realize is that in spite of all the disparity, there is a lot of opportunity for small businesses right now, because wherever the economy is doing well, a lot of support small businesses which provide support services will actually do well. And that is something to be kept in mind. The second place, Detroit, is a big surprise for everyone. Detroit recently filed for bankruptcy, so obviously everybody was thinking that this is down in dumps. But one thing to keep in mind here is that we have looked at the whole metropolitan area, so we have not just looked at Detroit City. The second thing what has happened is the auto sector has staged a very strong comeback, and the whole Detroit metropolitan area and the areas around it, including Dearborn, suffered a lot during the recession, both because of the redundancy in the auto sector as well as the real estate prices falling dramatically. And state of Michigan actually has done some very interesting job in access to credit. So that has helped actually a lot of small businesses. They are almost the best state in the country to use the small business loan fund from US Treasury. But what has also happened is because of the uplift in the auto sector, again example like the uplift in the technology sector in the San Jose area, a lot of small businesses have benefited, and there are a lot of IT services business, a lot of professional services, small businesses, a lot of businesses in food and accommodation, construction, real estate, which actually have got benefited because of the uplift which has come in auto sector. So again, it shows that in spite of what's there in the news or in the headlines, things can be pretty different on the ground. And what really happens is that, media headlines are really a lagging factor. Something has happened and then media reports about it. What we are trying to do at Biz2Credit is that since we have so much of data, we are trying to predict things. We are trying to get smarter. We are saying, okay, what could be your opportunity for next 3, 4, 5 years? So you have to look at that opportunity and not like what has happened over the last 5 years. Because as somebody clearly said, past is not the predictor of future, so like we have to keep that in mind. And as a small business owner, a lot of time being smart and being optimistic actually helps you. And if you don't get flustered by headlines only, because today, a lot of people think, and even I was thinking before the results came that Detroit is down in dumps. But when we are looking at the health of businesses, we are looking at cost of operation of these businesses in those areas. They have become pretty competitive. So one thing also to keep in mind here is that areas of the country which suffered the most in the recession, there the fixed cost of doing businesses has actually gone down dramatically compared to number 7 city or metropolitan area in this New York, New Jersey city, where the market didn't go down as much during the recession, but the cost of doing business is going up pretty dramatically. So if you are looking to open a business or grow your business, one thing as a small business owner you need to realize is that you have to look at your fixed costs. You have to look at your operating cost on an ongoing basis. You have to look in which states the minimum wages are being increased, in which states you will have to pay more say taxes, because these are important things, especially in the first 3 or 4 years of your business. And I will give you an example here. We finance a lot of franchisee businesses. So let's say Subway operating in New York City has a lower operating margin and makes less money net compared to a same Subway operating somewhere in Midwest or in Michigan. So which is very surprising, in spite of having a top line which is a lot more than in some of these Midwest states and in Michigan. And the reason is very simple, because the operating costs are lower in those states, the rent is less, and if you're opening up a new Subway or a new franchise, it might even make sense for you initially not to be in a big city like New York and be in a smaller place, grow your business, flourish your business, and then come to a bigger city, because you will have more capital, you will have more experience, and once you have more experience, you will be able to actually go and get access to credit, which will be a lot cheaper than if you don't have track record and experience. The other thing that we are also seeing is the advent of the technology, which obviously San Jose is an example, Detroit is an example again, because auto sector has become very tech-centric, so obviously a lot of tech support companies are there. But also, cities like Las Vegas, which traditionally have never done well with small businesses. And a lot of professional services are going there, transportation and logistics companies are going there. And the cost of doing business again in Vegas is very low compared to New York and some of the other bigger places. So, and it's also close to California. So there is, a lot of companies are setting up their back offices or outsourcing their back offices in the Vegas area right now. A lot of the technology support, a lot of professional services businesses have moved there. So what we are seeing again there is that, impact of the economy in Northern California, but also lower cost and also availability of a good trained workforce. And the other thing which is also happening is very interesting is that, one of the biggest growth components in the economy is now the minority and the women-owned businesses. And Las Vegas has a very big Hispanic population. They're opening up a lot of businesses. They are expanding their businesses. And they are also actually, seeing an impact of, the growth of minority businesses, because minority businesses, when they grow, they bring in more minorities there. And they actually traditionally have focused less on getting access to credit from banks and using their own money. And that has been something very important, because during the recession, the businesses which were able to grow with their own internal capital have actually done better than those who were more dependent on access to credit from banks. And this is where they have also become more efficient, because a lot of these businesses cut down their costs by being owner-operated businesses, and they were able to survive, and now they are getting the benefit of that. Area like Washington, a lot of benefit coming in from the metropolitan, the spending by the federal government over the last few years, plus contracts, plus also again the impact of IT, because there are a lot of IT services companies, and there also we are seeing a lot of minority and women companies and women certified companies are growing faster because they are getting more federal contracts.
Very interesting. So Rohit, one of the things that strikes me about these findings is when I look at slide 15 of the presentation compared to some of the other slides. Now slide 15 is for women-owned small businesses. And according to that, the size of the business in terms of annual revenue tends to be much larger than, say, some of the other businesses getting credit. Yet the age is younger and the average Biz Analyzer score is lower. And you might take a moment to describe what the Biz Analyzer is, because not everyone listening may know what that tool is. Yeah. It's a really neat tool.
Yeah. So what we have done is that, as I said that, there's no single small business scorecard unlike FICO score for consumers. So over last 5 years, we have built out a scorecard which takes into account your personal credit score, your age in business, your cash flow as a business owner, the kind which place you belong to in the country, because some places grow faster than others, some places are more business friendly, and also the ability to for you to get access to credit. And then Biz Analyzer score is a culmination of all these different factors, and we take weighted means. And the reason we do it is that we give a free financial checkup to all small business owners, and they can get all this data coming in from credit bureaus and from IRS and from other places free of cost, and they can actually benchmark their businesses against other businesses by industry, by geography, by age, by revenue, by corporate structure. And then it also acts like a guide for them that how to keep improving their credit worthiness. Because that is something very important, because as I said earlier, women-owned and minority-owned businesses in this country are still, they lag behind mainstream small businesses in terms of access to credit. They are typically smaller. And the other thing is that, for them to get access to credit from traditional lending sources is still a bigger challenge. So one of the things that Biz2Credit is doing is that Biz2Credit is working with a lot of federal agencies, including Federal Reserve Board and SBA, and the aim is that Biz Analyzer scores become a de facto credit score models for small business lending, the way FICO score has become. And by collecting more data on small business owners, and by decimating more data, and by helping small business owners to get one single score, which takes into account both their personal credit, personal financial stuff, but also their business credit, business cash flow, and the industry risk, will help them also to keep improving their credit worthiness. Because credit worthiness is not only to keep, making your business better from an aspect of getting access to credit. It's also, it helps you when you are applying for a federal contract. It also helps you when you are looking to take your business to the next level. Because today, if your business does not continuously keep improving, it will actually go away. So I think that's the key point, that how you can keep, making your business better. And that's what the Biz Analyzer tool is trying to provide. And you can go on biz2credit.com, or you can go on smallbiztrends.com, which is Anita's site, and you can actually get a free financial checkup, and then you can keep maintaining it. Even if you don't need access to credit, you can have that.
Yes, it's a really great tool in the sense of, well, in a lot of senses, but one of the things that really strikes me about that Biz Analyzer tool is that it really acts like an educational tool, so that it really educates you as to what you need to do in your business to prepare your business to get credit. Because I think what we're seeing on slide 15, if I understand your points correctly, Rohit, is that you take women business owners, for example, and the access to credit is well, let's say the going after credit is a different experience for women-owned businesses, and there is not always the same level of credit worthiness there, preparation to get credit, and so younger businesses and smaller businesses in particular may be the ones that suffer when you deal with small businesses that are women-owned. They may wait longer in order to go for credit because they're not quite ready as compared to a male-owned business, for example. And with a tool like that, it really helps you understand, well, these are the things I need to work on. Boom, I work on this. Boom, I work on that. Boom, I work on that. And when I talk with other women-owned businesses, women business owners, they really say, their focus is on growing internally. And while that may make you a stronger business, yes, it does mean that you grow much, much more slowly when you don't have access to capital, and you're not going to get additional money to enable that growth. So everything is always constricted in your growth. You only can grow as much as you have money coming in the door that month. And so it really slows down your growth. It really, lengthens the period of time that your growth trajectory goes up.
Yeah, and one more thing, Anita, which you can also comment here is that what we are starting to see also is that a lot of minority of women-owned businesses also don't know fully about the certification programs which are available and how they can take advantage of that to not just grow their business but get more contracts and then cheaper access to credit, because if you're a better customer you will get better quality credit. So like you run a successful small business and do you really do you come across a lot of women who are trying to find out about or even minorities about the certification program, or you don't find that that question coming up?
What I find is that not as many minority-owned businesses or women-owned businesses, or even, there are now programs for veteran-owned businesses, yes, for example. That's another area. And not as many as you would think are focused on that. And they're missing out in two ways. A lot of times the focus is on government contracting. And so I think what happens is, if you're a business owner, let's say you're a minority business owner, and you're thinking, well, I'm really not going to get into government contracting. That's not my main market. Ergo, I'm not going to worry about these certification programs. But you see, you're missing out, and you're missing out in this sense because in the corporate world, when you go after corporate business from large corporations, many of them now have, if not necessarily certification or set-aside programs, they do have internal goals to do X amount of business per year with minority-owned businesses and with women-owned businesses. So what that means is somebody within these large corporations is being evaluated upon and may even be compensated upon actually giving X number of contracts or so much in business to women-owned businesses, to minority-owned businesses. And so a lot of them now are buying into these certification programs. There are some certifying agencies out there that are available, and they will actually go through your records and they will certify to these companies that you are in fact majority owned by a woman or majority owned by a so-called minority. And so what that means is when you go to sell to these large companies, there's a little bit of an advantage there if you can say, my business is a minority-owned business, my business is a woman-owned business or a veteran-owned business or whatever. And, it's not, you still have to have a good product, you still have to have good service, you still have to have something that that corporation needs. It's not just a blank check they're going to write. But, when you're being evaluated against another business, you might have just a little bit of an edge there if you are certified. So I strongly recommend that you look into certification programs. And these are, especially in the case of women-owned businesses, we're not necessarily talking about a government certification. We're literally talking about a third-party entity out there, some organization that would certify you. And all you need to do is go to Google and just type in certification for minority-owned business or certification for woman-owned business. And you'll find the organizations out there that run these certification programs, and their websites are filled with information on how to go about getting certified and so on. Again, it's not a magic ticket to business, but it's just one little thing that you can add to your arsenal that might help a company choose your business over your competitors when it comes time to making a choice and they need your product and service.
Yeah, no, I think that's a very good point, and this slide really captures that, because if you see, metropolitan areas like Denver or Baltimore, Maryland, or even, cities like Milwaukee, what is happening more and more is that, say technology and IT is playing such a key role in every single business right now that, either from a certification perspective, Baltimore, Maryland is seeing a lot of growth in women-owned businesses because they're getting certified. They can get more contracts, not just with federal government, but also with Fortune 2000 companies who have to give up to 20% of their contracts to minority and minority, veteran, and women-owned businesses. But also, I think the other thing is, even for Main Street businesses and like focusing on them, what we are starting to see is that the technology is playing such a big role, both in terms of running your business and marketing your business, that women are getting some edge in that right now. But I think every business can learn, if they can learn to use technology better and can learn to use the online marketing skills and everything, it will help them to keep growing their business. And these are some of the examples where, wherever, areas like organic food, tourism is booming, where, areas like where there's instead of traditional manufacturing hubs, it's getting more high-tech stuff. Auto is one example, healthcare is another. And one more observation here, I think, which you can highlight is that you're a woman-owned business, you're actually based in Midwest, and you use the technology really well. So like you tick mark into all those criteria which a lot of businesses can learn from that. So like how has your experience has been that not running a business out from New York or San Fran or from some of the bigger metropolitan areas, how that is, and still using the technology, you have been able to grow your business,
Yes, and that's a great point, because you really can be location independent to a large degree today. Now that doesn't mean I don't travel. Yeah. And I have visited you in New York, for example, Rohit, and it's important to meet people in person and attend events and network and so on. But on the other hand, what the real benefit is cloud technology. And cloud technology, of course, is, it's just a fancy term for saying that you open up a browser and you can go online or, use a mobile device to get access to the web and therefore get access to technology. So a perfect example is the Biz2Credit, not only the Biz Analyzer tool, but your whole platform, where you're going online and it's your entry point to get access to a solution or to get access to what you need. So my advice to any business owner is, first of all, use cloud technology in your business operations. Use it in your marketing, use it in your sales. There are, a variety of solutions out there. The challenge is to make it all work together. And so you do need to put some work into integrating different technologies and making sure that they work together and they pass data from one to another so that you don't have to individually key in data, or do a lot of manual work to make one piece of information get from another in your organization. But I would also strongly recommend that you look at, not just using other technology, but really look into developing your own cloud-based technology, whether it's for your internal operations to do those things that you need to do in your business to make your business run more efficiently, faster, better, cheaper, whatever it is, or to sell more and to interface better with customers and serve customers, whatever it is, really look at developing that technology, because not only are you interested in using it, but your customers are using it. And they're expecting it today. They're expecting to be able to go online and do a lot of transactions, or just get service information, or just to chat with someone live, or even just to find information out about you. They want a lot of that information, but they also want to be able to conduct transactions. And so that's the power of technology, that if you can really harness that, a lot of it lets you reach out well beyond your local markets, and then you're not really, you're not a prisoner of what the economy is doing in your particular area as much. You can de-risk your business because you're able to reach out to other markets that may be doing very well, even if the economy in your particular area isn't doing as well. And I would also say that, it lets you get into niche businesses. In a lot of cases, if you try to do a very narrow niche business in just your local community, you wouldn't have a large enough market. But if you can reach out through the web and reach out to a much wider market, you can afford to go narrower. So you can go narrow and deep, but still have a big enough market for your business and to be able to grow with it. And that's where, we talk about competition today, but that's where small businesses can compete the best, is when we're dealing with very niche markets in many senses. We're able to go after those niches that the larger competitors can't afford to, or don't find attractive enough to go after, or they just haven't gotten to them yet. And if you can get a foothold in them early and stake your claim in that, and it becomes your business and you're the best at whatever that niche is, you're so much better off, and now you've made a business out of something you could possibly never have made a business out of if you just had to focus on the market in your local town.
Yeah. No, and I think that's a very good point, because that's why Denver scores so highly, because it's like organic food and all that stuff, which now you can use the technology to market it all across the country. You can create a brand pretty quickly, which in like earlier days used to be very expensive to do that. And because the next slide I really want to look at is that the access to credit will still be a challenge for small businesses, I think, for even next 12 months. And what I mean by that is that there's a lot of money available to today, but money which is reasonably priced, which is bank money, bank loans, is still not anywhere near the pre-recession levels. So I think Anita made a very good point that use the technology. Don't be so niche and so local, because if your local economy is not doing well, then you should have a bigger market. And one example that we are seeing is that we have a lot of customers, like in the traditional businesses, like we have clients who are dealing with in the luggage businesses, and they have set up Amazon storefronts. So now they can market everything in the country. We have other businesses, in the transportation and logistics, who have used the technology to start booking orders, from other places and having clients not just in their local areas. And I think the big challenge for small businesses, irrespective whether they're Main Street, minority, women, is that this whole gap in the credit markets is still there and will be there for some more time. But what is happening in the economy on the ground is the economy is improving. So there's more demand for things starting to happen. So like if you as a small business owner are smart enough to obviously locate in areas which have low fixed costs but also use the technology, then you can grow all across the country pretty quickly, and you can fulfill orders without having a need to be in a bigger place where the overheads are a lot more. And I think the other benefit of that is that once you establish your business, there's a saying that when you don't need money, then you get offered a lot of money. So like the key thing is that if you are in business for 3 years, you are profitable, you will get access to reasonably priced credit. So like that should be the aim, to build a sustainable, profitable business, because once you do that, it will be very easy for you to keep getting the money and the working capital that you have. And that's what we created Vistocredit for, because we figured out here that there's a big gap in the market. We figured out, and I think Anita can also relate to that, getting a loan from a bank to today is still very tedious. You have to go to bank, you have to fill out multiple application forms with almost no guarantee whether you will get any kind of money or not. And like, even if you get, you don't get the visibility of how to keep improving your business, how to keep growing your business. So the aim of Vistocredit is to help customers, is to make them better and better, and also give them a whole dashboard, a repository of documents, and also bring in people like, say, Anita, who actually themselves are big, say, success stories in the small business space, and so that they can relate their experiences also. So I think that's the key. And one thing that I think, Anita, you can also talk about is, which I think a lot of people ask me, is that you work and you have a lot of contracts with Fortune 500 companies. So like, how do you do that? Because you have a business which is a niche business at one level, but you also have all these contracts, and that help, and that has helped you to build your brand name, because when your name is seen with FedEx or with HP, that builds your brand name. So I think that's another learning which a lot of Main Street small businesses can get, whether they're in food business, accommodation business, transportation, logistics, that if there are some clients who are Fortune 1000 or 2000 companies, one way or the other, it will help them to build a better business and even increase their valuation if they are planning to sell their business down the line.
So I think that starts, to get business from large corporations. I'll give you some hints, but I'm going to start by actually recommending a book. And it's by someone I know. It's written by Jill Conrath, and it's called Selling to Big Companies. And she wrote it a few years ago. She's written 3 books now. She just came out with her latest book, which I was happy to recommend for her. I have no financial interest in anything that she's done, but I just happen to be a fan of her work. And in that book, she talks about how to reach out to big companies. And there are a lot of things she talks about. She's very specific about techniques, but one of the things that she recommends is that you have to think in terms of the old marketing adage of 7 touches. So if you've ever heard of that, you have to think about putting yourself in front of large businesses by having repeated reasons to get in front of them, or touches with them. So you might start in a non-hard sell way, just reaching out to them by sending someone you met in a large company some information that you thought they might be interested. Send them an article, for example, and say, thought of you when I saw this. Or try to get them to sign up for your email list, and keep touching base with them that way. Touch base with them through social media, just so that you stay top of mind with them. So the idea is to find ways to take whatever contact you've had already with anyone in a large company and try to stay top of mind with them and build up that recognition that they have of your company. Doesn't mean they're going to buy tomorrow from you. Chances are they won't buy tomorrow from you because they probably don't have a need tomorrow. But when they do have a need, they're going to be thinking of you. And I think you have to think about, reaching out to large businesses by thinking in terms of, a longer term horizon. I have not found that it's a fast kind of sale. It's not something that you're going to, reach out and close some business tomorrow. It's not like going and buying a cup of coffee, of course, in a coffee shop. It really takes a lot of time, sometimes years, to build up relationships. But it really is based on building those relationships. They have to come to know you, have to feel comfortable with you, have to know what you're about. I think the web helps a tremendous amount today. I can't even imagine doing what we do in our business, which is basically we're a magazine. And I can't even imagine doing what we do without the web, because the web really helps us brand. And that's why we spend a lot of time online at various social media and various ways online, getting attention, and we enter into partnerships with other companies that will put us in front of audiences, and they help build our brand, and so we do things for them. And so you really have to look at it that way. You really have to look at it as, how do I build up my brand online? And the web is your friend when it comes to that. So if you ever question and wonder, like, why should we spend any time on social media? Well, a large part of that is really to reach out and make these touches with potential customers, and just keep your name, your company name, top of mind with them. And I think that that's really, really important. But I think it's very, it's very possible to sell to large companies. And again, what I was talking about with certifications, it really does matter. We even put on our website, for example, that we are a woman-owned small business. And, I have had companies say to me that, we see that you're a woman-owned small business, and we are keeping track of that. So we have a little form that we would like you to fill out, a vendor form, and it's got a little section on it about either, being a woman-owned business or minority-owned business or whatever. And so those things do matter. I don't think that's the only reason that they do business with you, of course, but it is one of those things. So you really have to kind of put yourself in the mind of the large company, what they're looking for, and the fact that, many of them are committed to dealing with small businesses. Best thing is, do you have something you can offer them? And, that's really what you have to focus on. I would also say we've done better when we've focused on, how can I say it, providing smaller level, entry-level types of products and services or offerings, because it's very hard to get, anyone to want to buy something if they have to plunk down 6 figures the first time they do business with you. But if you can provide something that gives them a chance to learn to work with you and get comfortable with you, that maybe costs, the low 4 figures, that's a different story, or a few $100s. Now you have something that you can do for that company to prove yourself, and it doesn't involve a lot of risk from them. And especially if you can fit yourself under the budget limits that a department manager has, for example. If you can stay under their department budget limits so that they do not have to go to other parties in their company and get approval, your chances of closing business with them are much higher.
Okay. And I think the key takeaway from this, before we open up for Q&A, is two things. One, the parts of the country which got hit the most by recession, states like Michigan, Florida, California, are coming back. So that's good news if you have a small business located there. If you're looking to, start a small business, those are good areas. Plus states like Texas, which have grown over the last few years. And then the other aspect there is that, you could be anywhere in the country now, so it doesn't matter. I think that is the key, because now the key is that it's not location specific anymore. You don't need to be in a bigger place. You don't need to have a lot of money to start and thrive in your own business. You could be anywhere in the country, and you can actually build a pretty successful small business, and you can take it forward from there. So I think those are the two key takeaways. And obviously the third is that, credit availability is still a challenge. It's got a lot better in last 1 year. Our hope is it will get better in next year to 2 years, but it's still not there where it should be. But the good news is the Main Street economy is improving, so the bad days are behind us, and our hope is that the good days have just started, and next few years will be very good for the overall economy. And that's where we feel that as a small business owners, you should take advantage of all the tools that are there for you. And then if you have any questions, we will open it up for the Q&A.
Okay, so Rohit, here's a question for you.
Yeah.
And the question is, if I could do one thing to increase my credit score,
Yes.
just generally speaking, not one thing related to my particular business or anybody's particular business, but one thing that would have the biggest impact on my credit score and therefore my ability to get a loan. Is there one thing you recommend that small businesses focus on first and foremost?
So one thing that I will recommend to small business owners, and I will answer this question in two parts. One, on the business credit side, they should try to set up a business credit as soon as possible. That means they should incorporate their company. That means that they should try to apply for a business credit card, not just for a personal credit card, because the more credit history they build on the business side, faster and sooner, better for them. On the personal side, once you have started a business and you want to keep growing your business and you want access to credit, a lot of time business owners borrow very heavily on their personal credit card, which leads to their personal credit score dropping. So they should document every single expense that they are making for the business from their personal credit cards. So they can explain that when they're looking for access to credit. A lot of small business owners do that, but they don't document it, the expenses they make for business from their personal credit cards, and that's why they're not able to explain it. Because if you are able to explain it, there are SBA programs and micro lending programs where you will be able to get access to reasonably priced credit in the country.
And to follow on that, what you just said, would you recommend that small businesses try to get a specific business credit card as soon as possible so that they don't have to max out their personal credit cards?
Yeah, see, I will not recommend any single business credit card. We don't endorse any business credit card, but there are things like, say, American Express credit card. There's a Capital One small business credit card, and you need a credit score of around at least 650 to 660 to get that. But at the same point of time, that will help you to establish business credit. Business credit also gets established by putting a utility bill in name of the business, by signing a lease in name of the business, by incorporating your company. A lot of business owners make a mistake of not incorporating a company early on, because the more you delay it, the more time it takes for you to build a business credit. So do everything in name of the business if you really want credit to come in the name of the business. So it should be treated as a separate entity by the business owner before lenders start treating it as a separate entity.
All right, another question's come in. Thank you. And this question is, how long does it take to apply through Biz2 Credit and actually get a decision, yes or no?
So, the credit decision making is actually very interesting question, because what happens is that if you're looking for credit which is expensive, you can actually, get it within 24 to 48 hours or 72 hours. If you're looking for a micro lending credit, up to $50,000, it can take anywhere between 2 to 4 weeks. If you're looking for a bank credit, it can take anywhere from 3 to 6 weeks. So that's how the whole credit market works today. And one of the things that we at Biz2 Credit are trying to do is to streamline more and more of bank lending, so that time, the amount of time it takes for credit to be accessed can go down, and at least business owners can get an answer more quickly than what they get as of now.
And I would encourage you, if you have any questions, just insert them in the little chat window. But I have another question for you, Rohit, and that question has to do with these findings. So as to an individual business owner, for my business, should I be discouraged by any of these findings? Are they telling me I can't get funding if I'm not located in one of these top areas?
I would say this is an indicative study. Obviously, if you are in some of these top areas, it's more conducive, but that doesn't mean that if you are not located in these areas, you won't get access to credit or you won't be able to grow your business. I would say, business owners are optimistic by nature, and as we said during the whole webinar, is that the businesses are becoming less and less location specific for their growth. If you are able to grow your business, sitting in outside these 25 metropolitan areas, nobody's stopping you. Nobody's stopping you from doing that. Yes, but what happens is that if you don't have a strong, banking system in that area, access to credit from traditional banks will be a challenge. From micro lenders, you can still get it, but it should still not stop your growth. So, like one example is Detroit. Detroit, during the recession was in very bad shape. And one of the things which has happened over the last 3-4 years is that because banks were not lending money there, the government of Michigan has worked very closely with U.S. Treasury to bring money from alternative sources, which has been very successful. So obviously it was a challenge, but people 3 years or 2 years back who gave up on Detroit now are seeing the results of that. So I would say there are other cities, which are doing well, even if they didn't make it in top 25, and I think next year results might be equally surprising. So you should not say that if you're not in top 25, you have no hope. I think there's still a lot of hope. And actually, the cities which are in not top 25 will have lower operating costs. And you can actually, if you can control your expenses and can grow your business more creatively, you have actually a better chance down the line to get access to credit.
So if you're in one of those areas that's not the top area, you're saying, really look hard at your operating expenses, try to keep them as low as possible.
As low as possible, keep growing your business, create some history, because once you are 3 or 4 years in business, you will get access to credit. You will get access to credit from a bank. You can get access to credit from a little bit more high cost money even 1 year in business. The key is if you keep growing your business, operating it nicely, you will get money. You can be anywhere in the country.
So I want to address a question that may seem strange, but I think it's an important one. It has to do with the state of mind of a small business owner. One of the reasons a small business owner might not want to apply for credit is the fear of being rejected. That fear and that sense that, well, it's really, it's going to undermine my confidence. What would you say to that, Rohit, to try to get over that fear?
Yeah, so that fear is a big factor, because when a business owner goes and wants to apply in a bank, the first thing they fear is the rejection. That's why what we have tried to do at Biz2 Credit is, one is the Biz Analyzer tool and score that clearly tells you upfront, what is the chances of getting any kind of loan or loan from which institutions without having to even apply, because we have underwriting criteria of all the lenders on our platform. The second thing is, somebody asked me this question, what do you think about crowdfunding? So crowdfunding, we have introduced an institutional platform where, institutions are lending to business owners at a cost which is reasonable, compared to normal, say, cash advance lenders. But their underwriting criteria is less stringent than banks. And our take is that if you use a platform like Biz2 Credit, even if you get rejected, you get rejected in a private environment, point number one. And point number two is that even if you get rejected by a traditional lender, we will help you to match to a non-traditional lender. But more than that, we also guide you that what was the reason for you getting rejected and how you can keep improving your creditworthiness to eventually get approved. Because getting rejected once doesn't mean that you will always get rejected, and there are black and white reasons behind getting rejected. So like if you can address those things, and unfortunately lenders in this country will never tell you what are the reasons, because they are bound by privacy laws and there are Reg Bs and everything. But we have all the data and we share it with our customers, and that's all free of cost, because our aim is to help them to overcome that fear of rejection. Because if you have that fear of rejection, it's not just for credit, it could also be for growing your business. And as a small business owner, you have to get over that fear every single day, because that's the only way that you will be able to keep growing your business.
And that's a great point. So you're really saying that Biz2 Credit is an intermediary, so you're not judging the person who comes in, and in fact you're trying to help them understand and come back another day and try again.
Yes, exactly. Because that's what we do. Once you come and fill out your information, we keep your data. We try to re-engage you. We try to run it against new lenders coming on our platform. So we try to do everything for you, possible. So we become like your virtual CFO without you having to pay us anything out there, actually.
Excellent. All right, I think as we're coming down to the end here, and those are all the questions that we have in. Rohit, any additional points that you would like to make?
Yeah, there are one or two additional questions. Like somebody asked a question about how does the internet-based business fit in here. So obviously, internet-based businesses are growing pretty quick. Crowdfunding is actually a very good source of funding for a lot of internet-based businesses. You know, internet-based businesses, banks still don't understand them, so it's still harder to get money for them. But my experience and take is that if you run an internet-based business, it's doing well, you know, and you have some history, you will be able to get money. So one example I will give you here is that we have funded a lot of online businesses because after a point of time they need offline resources. So they need a warehouse, they need a logistics, you know, stuff. They need, you know, some other, you know, infrastructure, whether it's just buying equipment, moving into a bigger office or something like that. So if you think like that as an internet-based business, you still have a very good chance of getting access to credit from traditional banks, but you have to present it differently than just saying that it's just an internet-based business out there. Somebody also asked a question. Yes, we will be providing slides to all the participants here. We'll also be sending in a video recording after the webinar, and then if anybody has any questions, they can ask, you know, even questions.
So very good. And where can people go to find out more, Rohit?
Yeah. So if anybody needs more information, the slide is there. You can call us at 212-644-4555, or our toll-free number is there on our website. You can also email us on info@biz2credit.com, or there is my email ID directly, and we will you know, love to answer any questions. If there are any feedback that you have on our webinar, we will love to get your feedback, and we'll also love to, you know, see that, you know, how we can and if there are any topics that you want us to address in our upcoming webinars, we will also be you know, very pleased to know about this.
Well, thank you very much, Rohit, and thank you all for attending today. We appreciate your time and hope it was informative.
Thank you. And thanks, Anita, for your time.
Thank you.